Not quite confident enough yet, because we haven't yet completely eliminated the tail risk, as I would call it, in terms of a crash out or a hard Brexit at the end of March, even though I think the risks of that have clearly diminished over the course of this week. But also that, you just heard in that clip, that Labour leader Jeremy Corbyn is not yet coming to the table in terms of trying to come up with some sort of cross-party negotiated settlement here, and he's threatening potentially to bring more no confidence motions. And if the prospect of say a no Brexit or a referendum rears its head, it's not inconceivable that some of the hard Brexiteers within the Conservative Party would cross the aisle and vote with Labour to bring the government down. So that risk is still there. What I'm waiting to hear is that an extension of so-called Article 50, which I think is increasingly probable as the next shoe to drop, if you like, in this saga. If we get that, I think the flip side of that is that it sharply elevates the prospect that we will ultimately have a second referendum, and whether or not that would produce a different result from June 2016 is still, frankly, anybody's guess. But I think markets would take the view that if not a soft Brexit, then potentially no Brexit. The odds of that has increased, and that I think will be the time to be accumulating sterling. But that opportunity will probably present itself in the coming few weeks, and the upside we think is potentially very significant.
Yes, Ray, but to me that just does sound like more uncertainty on top of more uncertainty, and we know the business community certainly doesn't like that. But going back to what you said about dissent from the Brexiteers, what that could mean for the chances of Labour eventually taking power here, I know that's a long way off, but what would happen to sterling if, in fact, Jeremy Corbyn prevails in his efforts?
Well, I think the interesting two questions are, what would be worse for the British pound in the eyes of financial markets, at least? A hard Brexit and all of the, at least the short-term, economic uncertainty and ructions that would cause, or the prospect of a return of a Labour government that I think in any measure is far further to the left than any previous iteration that we've seen of Labour over the last 20 or 30 years. And as we've seen in other parts of the world, a recent example being New Zealand in 2017 when they elected a Labour government, we saw some significant pressure on the currency. So under the very worst case scenario was that we crash out and we have an general election and we get the election of a Labour government. I think you could realistically be talking about the dollar sterling exchange rate heading down to somewhere close to parity. If we manage to dodge a hard Brexit bullet, but we still end up in an early election scenario and the prospect of a Labour victory, then certainly levels like 110 and 115 on the pound against the dollar are eminently plausible.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.